following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time yet again for the Old Option Block, the program, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, a sprinkle of analysis, a dash of unusual activity, and throw it all in the boiling cauldron along with perhaps a dash, a sprinkle, a little bit of some hilarity. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. I know I've been plugging it for a while, listeners, but it's coming soon to a podcast player near you. Of course, our upcoming Futures Options program. Trust me when I say we have 2 shows in the can. We're just rolling through all the fun post-production processes right now as we speak. So hopefully we'll get those finished by the end of this week, and maybe you can even get a chance to check it out later this week, if not early next week. But stay tuned to that. Stay tuned for that coming up at the Old Options Insider Radio Network. Of course, we have all of our other new shows. The Options News Rundown, a few months old now, but still a great one. And of course, the new Wide World of Options playing up there as well with our friends over at the OIC. A lot of great stuff to check out over there on the Old Options Insider Radio Network. But now it's time to dive into one of my most fun times of the week, the Old Option Block program. And joining me on the program today, starting off, let's go in order of proximity today. So the man holding down the reins closest to the Option Block HQ, you know him, you love him as the Viceroy, perhaps because he wears that fancy hat. He is Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Hey, Mark, good to be back, and a dramatically unchanged market today, other than the metals. Very, very quiet trading today.
Yeah, no one was paying attention intraday. Everyone is waiting for the after hours and all the fun that starts now. So we'll have some good analysis ahead of us. And then rolling on out even farther to sunny, scenic Riverside, we are joined once again, it's been too long, by the greasy meatball himself, good old Mark Sebastian from OptionPit.com. Mr. Sebastian, how are things by the side of the river?
You know, I live in Riverside. I work in the city of Chicago. I'm at the Option Pit World headquarters on the corner of State and Adams.
Global HQ.
Exactly.
Except for that little Frankfurt office. We won't speak of that. The less said about that, the better. How are things in Option Pit land?
Oh, you know, nice, real busy and happy, and everything's been going great. So can't really complain. I got a lot of fun events coming up in the near future, and one most notably with RCM. Later in the week. Looking forward to that.
Yes, you'll be hopping on the old webinar train with one Uncle Mike Tusaw from the titular RCM Asset Management. Uncle Mike, welcome back to the show to you as well.
Always happy to be here, especially on a day like today.
which is a quiet unch day in the marketplace.
Well, this is a day that my collars in gold and silver have had no short calls on, so this is a very happy day for me in RCM land.
There you go. All right, then without further
know your
ado,
RCM.
Know your RCM.
I like that.
Even you are still struggling with the naming transition.
Well, someone said know your options earlier, and it just kind of threw me for a loop. It reminded me of the good old days 6 months ago.
I'm glad I'm not the only one who's having this problem, and you do it every day. So.
Memories of the way we were.
And this is what we missed not having you on the show, Mr. Sebastian. Is these little melodic interludes we have here. Before we get into any more singing, let's dive right into the trading block.
The trading block.
All right, welcome to the trading block. This is, of course, where we break down the day's worth of action, and there wasn't really a heck of a lot to break down today. As Alex alluded to earlier, pretty much unched across the board in most of the major indices. Everyone's really keeping their powder dry ahead of some of the big earnings coming out in a few minutes, and we'll get to those shortly. Of course, one of the few names that did report today and actually had a little bit of activity, good old Mickey D's McDonald's, down about 3% on the day. And I've always said that when McDonald's can't make money, then it's dangerous for the rest of us. Of course, a lot of contrarians out there may say, hey, the economy is rebounding because people aren't forced to buy cheap $1 burgers anymore. So whichever side of that argument you fall upon, McDonald's is selling off pretty aggressively today. South, they were trading around $100, closing today about 97.5 on the day, down nearly 3% on the day. So a little bit of action out there. And of course, we're waiting, listeners, with bated breath for Netflix to see what the old Widowmaker is up to today in the after hours. They closed today 262 roughly on the day, down about 1%. Everyone waiting for the big move. Looks like the earnings are already out. So perhaps we can just dive right in then. Netflix, let's see where it closed. At the money straddle around $35, $36 here. And it looks like the after hours were trading off about 17, 18 handles here. So trading right now at 246 in the after hours. So we'll see. The first glimpse is always just that, the first glimpse. Mr. Sebastian, you guys probably doing a lot of setups today with your clients in Netflix, I'm sure. So what were you walking your clients through today?
No, absolutely not. I mean, I probably had 1,000 clients ask about Netflix, and I probably said 1,000 times, why in the world would you want to play in a stock like that into earnings with a $35 straddle and who knows from what's been going on in that name. Basically, I spent most of the day talking people off a cliff, and smartly. So I can't think of a good reason why I'd want to play that straddle either direction ahead, because even when you think you're winning, you're not winning with that stock. It will find a way to hurt you.
It will sneak into your house in the middle of the night and suffocate your children. It is just a nasty,
That's exactly
nasty,
right.
nasty
stuff. It is not your friend. All right.
You'll have to tell that to one of our listeners later.
That first hit of smack they give you for free so they can get you hooked.
That's true. I mean, this one, you have some track record now with Netflix of this thing getting his legs chopped out from underneath it. So if you're not prepared for that going into any earnings here with Netflix, then you haven't been paying attention. We do have a listener question about this a little later. Maybe we can discuss it, and that should be kind of fun as well. But yeah, right now, trading off about 18 handles or so in the old, or maybe 16 handles in the old after hours right now. But interesting one to watch. Of course, last show, we had an interesting debate about after-hours trading in the options market. It was pretty interesting. We only had time to get into a little bit of it, but it looks like a lot of our listeners really enjoyed that. People on Twitter and Facebook giving a lot of good feedback, favoring that episode and things like that. People obviously are interested in that topic, so much so that I'm probably considering maybe having another episode of one of our other programs, maybe a nice round table discussion on the topic of after-hours options trading, maybe bringing in, an exchange rep, a brokerage rep, a few others to get a number of the disparate points of view on that topic, because everyone has their own agenda they bring to the table. Everyone has their own viewpoint on what they want to see there. So it'd be kind of interesting to sit down and maybe really spend an hour diving into just that. because there is so much grist for the mill there. I don't know, Mark, do you have a chance to listen to our last show? I'm guessing no. You've been running around over there. But I know in the past you've been kind of vociferous on this topic. You think it's a disaster.
I think it's a terrible idea. And I can't imagine a scenario where that works out well for the retail client. All that's going to happen is markets are going to be really wide, and it won't be there. I think a good example is look at the liquidity on after hours markets in S&P 500 futures, and tell me how that goes for retail customers that trade into that. It doesn't. I think it's a terrible idea.
There's obviously two sides to that coin. Of course, we talked last week. We did it right around the time, I think it was before Google announced their earnings, or maybe actually it was during Google earnings. So we were watching the extremity of that move. They closed around 910, sold off to 860, I think even south of that in the after hours. So you're talking 50-plus handles away from that straddle. That straddle went out around $40, I believe, going into that earnings announcement. So, of course, the argument a lot of people would have there is that, hey, I would have loved to work a 50 or 60 offer in some sort of limited order book, a limit order book for that 910 put. And, hey, maybe you get filled because, of course, like a lot of our names, Google closed relatively unched the next day, opened relatively unched down a little bit the next day, and those puts opened up at $25 and never looked back. So if you had a moment to make that straddle work for you, that premium work for you, it was in the after hours. So I don't know. I see both sides. I see people like you saying people are going to get screwed over.
My thought process on that is that if you are so smart that you're running you think it's a brilliant idea to play a $50, if you can afford to put on a $50 straddle into earnings, then you should probably be able to afford the stock. Otherwise, it's probably a bad idea. Go and trade the mini options and save yourself the headaches. That's my thought process. I don't think retail customers that can't afford to trade stock after hours should be trading into straddles. I don't know, Alex, what are your thoughts on that?
I'm exactly 180 from you, and the point is precisely the mini option. Because This was Google's first earnings since mini options. You got a customer that bought 5 of the puts, saw the after hours move, and says, I wish I could get out. And I don't have an account big enough to get the stock. I suspect by the time I get out of these tomorrow, they're going to turn into a losing trade.
Right.
There's nothing magical in a world of electronics of a 3 p.m. or 4 p.m. hard close. This is just keeping the speed bump to the country club as high as possible, and there's no reason. I would make an argument that if you can't afford to hedge a 5-lot straddle in the mini options, you've got too big a position. So you're taking the small customer, the new customer, and tossing them out of the options market.
No, I'm saying he should do a 1-lot. Don't do 5 of them. If you can't hedge 50 shares of Google, you shouldn't be doing five mini straddles. I mean, I think this whole after hours discussion has to do with retail customers putting on too much risk and taking on too much into after hours. That's the beginning of that discussion.
I got a solution then. Why not just do this? Allow only closing transactions in after hours then for the retail customer.
That's not a bad idea.
Here's the question. What's the magic of 3 p.m.? What's the magic? Why is it at 7 p.m.? Why isn't it 8 p.m.? There's only a couple floors that physically operate. The rest of it is upstairs on machines. And to throw the small customer under the bus, everybody started as a small customer, right? Everybody started with $2,000 or $5,000. I mean, that's where everybody started. And it isn't the straddle buyer in this case. It's the person who bought 5 puts and spent $2,000 out of their $10,000 and saw this thing trade up and then sits there and says, I can't get out. I can't get out. And by the time it opens tomorrow morning, it'll either be twice what it is now or it'll be nothing. And the thing is, if I can give you an after-hours stock quote, how hard would it be? How many people in this industry have lost their jobs because of electronics, right? Thousands people have lost their job. How hard is it to leave the machines on? Is it going to be some additional cost? Sure. But most of the cost of trading today is fixed. Most of the cost at Spear, at Citadel, at Timber, at Susquehanna is fixed. And to run a night shift, every major brokerage house has to run a night shift. If they're in the S&P, if they're in the futures business, if they're in any kind of international book. Are there some costs? Sure. Is there some revenue? Sure. So my point is there's nothing magical about 3 o'clock or 3:15. And again, I've worked at the two largest exchanges, and much of the liquidity today is provided by people who aren't standing on an exchange floor. Look at the success of things like the E-mini S&P. Look at the success. Look at the way futures options have grown. You know what's kept futures options from growing more? We just looked at the metric, and you can't electronically trade the big S&P contracts options. Why? Why in 2013 aren't those options available electronically? Why are they only traded in the pit? And the answer is because I can close the gate to the country club. And it shouldn't be in 2013. Markets should be flat, transparent, and open.
You know, Mike, I like your suggestion. I proposed something similar several times, something that's a limit order book, limited around maybe earnings, maybe limited just to closing open interest. Granted, that's a lot of restrictions, a lot of hoops for people to jump through, but it could be a good test bed for this. A few brokers, a few exchanges, whatever the case may be, and you have it limited to a couple of earnings names. It's like a pilot. They did a pilot for penny pricing. Let's do a pilot for this and see how it works. At the very least, you're providing an outlet for these people who have these long premium sides of the positions. And I see all the other arguments. People shouldn't be trading above their size and things like that. But retail is having a heck of a time right now in this space, and there's this whole crisis of confidence. And to essentially shut down a large portion of the spectrum of these strategies, which all delve towards the long premium side of the spectrum, because maybe these people aren't sophisticated enough, or they don't know enough, or maybe they just don't have access to the big move. Because look at Google. Again, 60 handles off in the after hours, opens up down about, 20 or so. That part of the move that you wanted to capture happened in the after hours. If you had a limited order book, you could come in, close out some open interest, sell out those puts. You actually can make some money on that position versus trying to desperately to break even on the open. I think if we offer more of those options, pun intended, to some of the more savvy, sophisticated retail options customers, that's only a good thing. At the end of the day, we're limiting people right now, and that's hurting a lot of the business. But of course, no one wants to take that risk, that leap of that first limit order book out there being the first ones out there, because it's going to be probably a disaster.
I just think that is a kettle of worms that 95% of retail customers are not going to understand and are get themselves into trouble. I think it encourages irresponsible behavior. I understand where Alex is coming from. I agree with him on principle. I just don't know if I agree in practice, if that makes sense. So
the problem with the argument is in 2000, people thought we couldn't trade options without a physical floor. In 2013, you have almost no floors still operating. You wouldn't build a floor today. You'd defend one if you owned one. There's no reason you can't run a second shift. There's no magic to a 3 o'clock close. Why isn't that a 7 p.m. close? Why isn't that a 12 midnight close? And the answer is it will be. And it's the old London answer about transaction tax. It'll move somewhere else. Well, right now you can't move somewhere else, but one of these smaller exchanges, whether it's Miami, or whether it's Box, or whether it's Jeff Sprecher bringing some innovation that he both talks about and some people says threatens to do, we're not going to be having this conversation 5 or 10 years from now. It's just nuts that there's an arbitrary cutoff in today's day and age with today's technology. And, we talked about this on the last show. We're going to beat this horse. Someone can't do it because the OCC board is like, and the analogy I use, the Security Council at the UN. One person doesn't want it, they veto it, it's dead. If the OCC board could have vetoed the ISE, you'd still be trading 3 million contracts a day today and paying $3 to trade an options contract.
It's funny, Alex, you bring up the ISE, and I floated this exact idea to your good buddy over there, Gary Katz, the CEO, current CEO of the ISE, a while back, probably 6-8 months ago. I thought, given his history, given the legacy of the ISE of being innovators, they would be a little bit warmer, more receptive to this idea than some of the other exchanges. And to my surprise, he shot it down outright. He thought it would be a disaster. He thought there would be no liquidity. He didn't want the market makers to step up in there. He didn't, even the notion of a limited order book, he really didn't seem to float his boat, so to speak. I mean, for someone who's done a lot of innovation in that space, he still seemed to cling to the idea that in order to have any sort of market, any sort of liquidity, you have to have market makers, and that opens up a whole new can of worms that they just didn't want to get into. So that kind of surprised me a little bit.
Yeah, well, the thing is, the ISE is 10 years old now, and they're an established exchange, and I'm not going to act as their spokesman. But the issue is you look at markets that trade in after hours, and to Mark's point, some of them are better than others. Liquidity begets liquidity. And if you fragment a market and say I leave the E-mini open, but the stock becomes wide and the program desk and the basket desks are gone, then yeah, it becomes a problem. But there's no reason you can't leave this stuff up electronically. Most of the trading today is untouched by human hands. I'm not saying there isn't human oversight for a lot of it. And in a after hours with Google, it would have to be very manual. But to your point, Mark, retail's not in there. We just did this whole push to bring small customers in with minis, and Google's a classic example because Google had some activity in minis, and the mini is still not the most liquid instrument, and it gets a lot of lip service. But real lip service is let's let people trade this. And the issue is, if the exchanges are the obstacle here, then get them out of the way. Create a limit order book and let the public trade.
But yeah, it is an interesting topic. I think one we can go on for quite a while. I think we'll reserve a lot of this for the upcoming roundtable on this, because I think people need to beat this drum a little bit more, because it is something that needs to be explored. It does seem like we're kind of leaving a lot of the options, pun intended, off the table for a lot of these people who come to this space. They learn about proper risk management, things like that. They want to go into an earnings event long, perhaps, as opposed to short, and we're really kind of curtailing them there. Of course, we said many times on the show, better to get your free gamma ahead of time, scalp it, and then get out. But if you don't want to take that approach, let's say you have a strong directional bias through the earnings or something like that. Like, look at Microsoft, a great example. Microsoft probably being the polar opposite example, where something that really worked going through the after hours. It had a strong directional bias, and it just kept going all the way through the next open, trading, closing today at about 32 even. So well off, three plus handles, over 10% off from where it was trading pre-earnings last week. So Microsoft being, I guess, the counterpoint example that in some scenarios you can get that liquidity, you can get that bang for your buck that continues on through the open. If you were long last straddle, you did fairly well. But that is not exactly universal, shall we say. Because a lot of people beating the drum these days, too, our friends over at CNBC and others, that Apple Vol is now cheap. This is the time to come load up and buy. I'll demur on the conversation about people going on CNBC as options experts and then making stock picks. Always drives me crazy. You're there as an options guy. Talk about Vol. Don't talk about what your freaking price target is for the stock, because nobody cares. But I'll just leave that alone for now. Of course, a lot of that is CNBC's fault. They make you say that stuff. They want picks. But c'est la vie. Interesting stuff. And Uncle Mike, are you still on this drum as well? You think Apple Vol is cheap here? Are you going to start looking, or are you going to still play the wait-and-see game going into 23rd?
Wait and see and going into tomorrow for sure. But what I do want to get back to doing after the earnings comes out, which are what, today in about 5 minutes?
Mm-hmm.
Actually, they were 3 minutes ago. You just missed them.
Oh, I missed them. Got it. But anyway, we're just long the stock, long a 390 put for April of next year for now, and then after the earnings, we're going to see what's happening. I prefer to stay out of earnings if at all I can help it.
So you're another polar opposite example of someone who doesn't want to play through earnings at all. So you don't even care about this after-hours
just
trading.
to add to it, back when we were doing the size of Apple that we were doing at one point, I was of the school of thought to where, and we did have the money to where we could have hedged a few times by buying shares in the after-hours market. We didn't need to, but there was a few times where I could have, and it was one of the ones to where I decided not to because we were on the right. We weren't quite on the right side of it enough to justify doing it. But had we had the ability to do options in the after-hours market, I would have definitely done it on some closing positions. In terms of doing an opening position in the after-hours market, that's something to where we've already talked about this, but I can just say personally, I don't think I would ever open a position in the after-hours market. It would just be for closing a position only after an earnings.
Yeah, like I said, and even that is kind of limited right now in terms of what we're seeing right now. Obviously, you guys have the size and sophistication to be able to hedge the quote-unquote proper way with the underlying, the way we all were brought up in this business, but a lot of people can't do that, so interesting stuff. But yeah, I think we'll defer further discussion on this because we can keep going for a while, but I think look forward to something coming down the pike, listeners on our network, where we really are going to dive into this subject in deep, dark, and controversial detail. But now, speaking of controversy, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we detail the interesting and or the unusual options activity that's lighting up the old tape today. Going to kick things off with, I think, a newcomer to the Odd Block. I don't think we talked about these guys on this portion of the show in the past. This is Skechers USA, ticker symbol SKX. They make all those fancy ladies' sneakers and whatnot. Of course, make a lot of kids stuff, too, as I've discovered. My little guy suddenly came up to me one day saying he needed to have Skechers because they help you bounce. They have springs in them, he was telling me. So apparently they're doing a lot of kid stuff these days, too. So maybe I should be buying this stock because they're doing something right. Well, someone clearly agrees because he came up today and did some size opening paper here in Skechers. Of course, this is the name, closing nearly $27, $26.88, up about 0.5% on the day today, averaging about 1,300 contracts a day, doing over 23,000 today. So some size paper, pretty much all of that, 90% of that was in this pretty sizable opening 1x2 we saw going up here. The AUG 28.29 call 1x2, 7,700 by 15,000 times this spread went up by the 28, selling the 29, 1x2, doing it for about an eighth credit, 12.5 cents there, listeners. And just an interesting trade overall. We talked a lot on this show in the past, people coming in and just willy-nilly buying upside calls in the name the thing is going to run. How come people don't do it a little bit more nuanced? Here's someone, perhaps a listener to this show, taking a little bit more nuanced approach. Mr. Sebastian, I know you guys at Option Pit were talking about this one earlier today. What caught your eye about this upside vertical 1x2 here?
Well, I love these type of plays ahead of earnings. They're, I call them like the ultimate pro trade, where the guy's basically saying, this is going up, it's going to go up somewhat, but vol's going to get crushed, and I'm gonna have all this gamma that the non-pros don't realize I just bought, and all these long deltas, or it's going to move the opposite way, and I'm going to keep my credit. It's really kind of as long as you don't think the stock is going to absolutely explode higher, it's a really difficult one to lose a lot of money in.
I haven't been keeping too much of an eye on Skechers. Is Skechers a name that's obviously going into earnings? Are we seeing people bidding up that call skew? Obviously, he did this vertical for credit.
I bought a new pair of Skechers, so that could be the issue here.
And my little guy's bouncing around with light-up spring Skechers right now, so there you go. Between the two of us, we put down some cash here at Skechers. But,
that's what I'm saying, man. It could be me driving sales. I'm just saying. Everyone loves
their Skechers, but of course we joked in the past about Apple having had those moments where the skew is just so bid up that you can leg into some pretty ridiculous things. I haven't had a chance to look at the skew. Is the skew that juicy here? Let's pull it up and see. Take a look. Is it that? Obviously, this guy thinking a 1x2, a good way to capture some of that upside.
Yeah, well, I'm looking at this thing. He got a credit, and
Exactly.
the 28s are trading at a premium, a vol premium to the 27s, or excuse me, the 29s are trading at a premium, volatility-wise to the 28s. So that's probably the right way to do it. It's a really, really flat upside curve. So I got no issues with this guy doing this trade.
It's just refreshing.
It's a smart trade.
Yeah, it's refreshing to see someone coming in and taking a more nuanced approach to his upside earnings buy.
An intelligent customer?
We profile so many.
What the heck is that?
So many, loading up upside call buys in odd block that it almost gets kind of you get beaten down after a while. Is there no one else doing anything else? So it's kind of nice to see a little bit different. Speaking of a little bit different, I'm going to keep on rolling into another name here, Verisign, ticker symbol VRSN, closed today, about unch on the day, 45.5 roughly on the day. This is a name that does another one, doing about 1,300 contracts a day, doing a whopping 6,000 today. Again, pretty much all of that coming in. Looks like one size buy right going up here on the AUG 46 strike. About 5,000 times paper came in and sold. Actually, sold them 4,000 times at 115, $1.15. That would be. Looks like another 1,000 went up since we wrote this up. But yeah, a lot of paper going up here. Open interest, just 180 contracts, so all opening. Looks like you're pretty much your run-of-the-mill buy right pre-earnings here. July 25th. We're looking here for a couple days down the road for earnings here, but an interesting one nonetheless. A pretty sizable buy right ahead of earnings. Is that your take as well, Mr. Sebastian?
Yes, indeed. But nothing wrong with the buy right. It's it's kind of the classic play. The guy probably. The only question I have is whether the guy is this adding to a position, or is this just a opening trade looking to get a little bit of that vol and a little bit of yield.
We're nothing if not classic, and indeed classy here on the
That's
old
what we're known
block.
for. That's what they say about you and I.
Speaking of classy
and classic.
Speaking of classy, the next one coming up, World Acceptance Corp. I just love that name. What does the world need if not more acceptance?
I concur.
Ticker symbol WRLD. That's just a fantastic name for a company. They closed today, $85, roughly even on the day, pretty much unched. This is another name, lighting up the old tape, doing 350 contracts a day, doing nearly 2,000. Pretty much all of this, again, coming up in one big trade. Someone coming up and blasting out 1,700 of the AUG 75 puts for prices around $1.10 here. Of course, this is the name that closed today, like I said, $85. So these are $10 out of the money puts. Of course, open interest is about 2,500 contracts. So it looks like this is someone who maybe had some longs on the table, taking a few of them off ahead of earnings. Again, earnings on the 25th. Before the open. Makes you wonder, though, why, if this is the same guy, why he's not taking the full caboodle off, unless he's had a bit of a run here and taken some money off the table here. Of course, this name gapped down about a week or so ago. Was trading in the high 80s, then got down to the 77 range. So if he wanted to take his puts off, that probably would have been a more opportune time.
Now, what are you going to do?
Yeah.
Timing isn't everything.
It is indeed the only thing, unfortunately, sir. Last up, we'll finish up here really quick with good old General Growth here, right across the street, ticker symbol GGP. I look out over their relatively empty headquarters every day, coming in here to the studio. They closed today at $21.44, about pretty much unched on the day. This is the name that does another one, pretty active from an options perspective, doing a whopping 600 contracts a day. But today they came in and did some size. They did over 5,000, nearly 6,000 contracts, all upside here. So closing up 21.44 on the day. We saw paper, someone coming in and just blasting out nearly 6,000, 5,600 of the AUG 22 calls for about 17 cents on open interest of just one contract. So this is probably open in paper. Of course, there are 2,300 open of the AUG 21s. What are the chances we're seeing someone legging into a nice little 1x2 here, Mr. Seabass?
I think the strong chance. You don't know, but that would be my guess. That would be my guess on the trade.
Either that or just an aggressive buy rider coming in here.
Yeah, no, I think it's probably a leg.
Of course, these are already in his face, trading 20 at 26, so we'll see. Mm-hmm. He's got some time here.
Yeah, exactly.
Got some time. An interesting one. Maybe we'll file that in the to-watch category. All right, and time to keep on rolling right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know the drill by now. This is, of course, the portion of the show where we let Alex loose upon you, the masses, with some options, wit, and or wisdom, and perhaps a little bit of knowledge thrown in there as well. Mr. Alex, what is cooking? Give us a peek behind the realm known as Options Express.
So I surveyed the desks before we went on air, and the futures desk was busy today, but it was predominantly the metals and oil. Gold up over $40, silver up over $1. Big volatility in both of those. Crude down over $1. The 10-year, the thing we like to focus on from a macro standpoint, has had a couple of days here of almost zero vol, which we haven't seen for a while, and I suspect that's why stock market volatility was so muted today. Not a lot going on. A lot of green lights. Asia was up. Google, Goldman, little traffic in those. Those are also stocks on the premium harvesting part of the hub. And now if you look at Google, I think it's almost unchanged from pre-earnings. But a relatively quiet day in the market. You know, S&P not doing a lot, VIX not doing a lot, little pop in NASDAQ, but most of the activity and frenzy today was in the metals.
Yeah, Google, you're right. Pretty much unched right now. Trading, I think, closed at 913. No, actually 910.70. So you're right back on that same strike. So all of that Sturm and Drang for naught there, Mr. Alex. So yeah, all you had to do was ride a week ahead and then hold on to it and grit your teeth and not get that call from your broker, and you're good. You did all right there if you sold that straddle. Of course, selling the Goog straddle probably takes a little bit more craziness than most of us here on the show have. Speaking of crazy, I think it's time to keep on rolling right on into the listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the old mail block. This is one of my favorite segments of the show. We haven't had a chance to do it lately, so we got a lot of pent-up questions flying in I want to get to. A lot of you writing in about various earning strategies, so I think we'll get to those. This first one up here seems tailor-made for you, Senor Sebastian, since you just got off your rant about trading Netflix. His question in from Mr. Doc Robbins. He says, just sold the Netflix 240, 260, 280 July week 4 Iron Fly. I sold it at about $18 with the stock around $259. Am I crazy? Longo would be proud. Well, yes, I am very proud. A, that you're a listener. B, you're doing my favorite strategy, the old Iron Fly. Not as gung-ho about this trade here in Netflix. You know, we talked here before, this thing can go hither or yon pretty quickly. Doing that a whole straddle, $18, trying to collect, $2 worth of outside risk here on that Iron Fly. Not a terrible trade by any means. It's just, I don't know, looking even right now, not even cheating, looking at the after hours, the odds that you're not going to get at least some movement in that Netflix straddle, maybe not the full 35, but you're probably going to get a good 20 out of it, and that's pretty much what you're betting here. So looks like right now in the after hours, you're about hovering around that 240, 242 strike there, so you're close. If it all holds this way, you may be all right, but it's a lot to put on, a lot of transactions to generate just on the off chance that Netflix is not going to move, and I probably would. If I had to bet which way it's going to go, I probably would say north of 20 rather than south. Senor Sebastian, I'm sure this probably just violates all of your senses here, trading Netflix.
Well, I mean, the one thing you would say is he did a 20-point fly and he collected $18 on it. So at least he put on something that has a nice risk reward on the trade as a whole. It probably still wouldn't be something I would do, but that's that's kind of, if you're gonna make a trade, that's the kind of trade you should make, is what I would say.
It is decently risk mitigated, shall we say. It's not like he's selling that fly for $8, something like that, which would be a far less desirable outcome.
I like it better than, let's say, a time spread or something like that. I love that he's got something with a very, very tightly defined risk. So at least there's that. And so what I would say is I wouldn't bop him on the head, but it probably wouldn't be my top pick.
I guess we got an interesting question here from listening to me, Ron Yurovich, but I just got it in, and it's pretty elaborate. Maybe we'll hold on to it for a little while so I can have a chance to read it through and digest it. But a great question about Facebook earnings there, Ron. Maybe we'll get to it on the next show. This next question here, Charles N. Looking at Ford, I love these abbreviations in Twitter. Half the time you have to decipher what they're talking about. Looking at the Ford July weekly 16.5, 17.5 Strangle for 25 cents. How's that for free gamma pre-earnings? Of course, Mr. Charles alluding to the fact that we've discussed many times on the show here. Put something on going into earnings. You get at least a few days and not a week usually of some free gamma, some free movement, and then you could take it off and not have to worry about all the things we've been talking about at the top of the show about after hours earnings and all your premium eroding and the move happening in the after hours because you got your free bang for your buck and you took it off. Maybe you paid a little bit of decay, but hopefully that got offset by some movement and it looks all right. Talking about Ford here. Ford closed today almost 17 even if I recall. Yeah, 17.04 on the day. So this strangle is pretty much exactly right in mid-market here. 16.5, 17.5, 25 cents earnings on the 24th before the open. So you're getting Wednesday morning. So you got one more trading session here. I'm not terribly averse to that. I know Uncle Mike, you've been watching Ford a lot here. How does this strangle sit with you?
Well, if I were to trade a strangle, if I expected big movement on Ford, I think it's okay. But I just typically, just from watching Ford, I haven't seen a lot of big moves right before earnings that I would feel comfortable in justifying that one.
Of course, Ford is a bit of a different beast here at 17 than it was back at 9. This thing is moving now.
It's
got a little bit more vol.
I guess I'd be more biased to the upside on Ford, if anything, if I was going to do something like that.
So you like more perhaps a vertical or maybe even a vertical ratio than just straight up strangle?
I do. Well, in Ford, I do. And other than I love the idea of the free gamma because of that. It's a great principle we've talked about on the show many times. But in this case with Ford, I think I'd have a hard time buying puts on it right now. Just because it's just been such the beast has been unleashed, so to speak.
The beast has certainly been unleashed. This thing has been on a rampage of late. Just watching this thing, it's been 14 to 17 just in the past few weeks. So compared to the kind of quiet premium seller you had back hovering between 9 and 11 for the better part of a couple of years, now this thing's just completely transformed over the past few months. Let's see, really quick here. This one's for Andrew. Andrew's not on. Maybe Mark, I'll have you answer in his stead. This guy has wrote in a question from Mr. Work. He writes, am I crazy or is 21 cents for the Zynga July weekly 3.5 puts a lousy deal? Zynga, of course, being Andrew's name of choice. We like to tease him quite a bit. These are actually trading a little higher now. Stock's down about 6 cents here, trading 3.30, so these puts are trading around 30 cents. What say you to our friend here, Mr. Workmark? He wants to blast out, or maybe doesn't want to blast out these Zynga puts that are now 20 cents in the money.
In terms of selling them at 21 cents?
I'm guessing that's what he's talking about.
It depends. Is he talking selling or buying?
I'm thinking the former, selling.
Yeah, I mean, it depends. Selling puts, if you're looking to take delivery, is not a bad do. And with Zynga trading $3.50 or so, collecting 21 cents, you're buying the stock almost 10% below its price. Now, granted, it's only 21 cents, but I don't think it's such a terrible do. Am I on Andrew's Zynga train? Maybe not as much, but if you like that name long term and you're looking to get into the stock, that's a great way to do it. And I have no issue with it.
There you go. Mr. Sebastian gives it his no issue stamp of approval on that trade, Mr. Work. Really quickly, we had a question last week from Mr. Winters, George Winters. Didn't have a chance to get to it. He wanted to know about the Microsoft July 35-34 put 1x2 for a dime. I'm guessing he was paying a dime on that one before earnings. Winner or waste of money? That was a winner, but of course not the whole way through, as we talked about before. This shows the danger of getting too tied to some of these ratios. If you did that straight up put spread, you were looking pretty good, but this thing obviously blew well through the 34 handle, closing at 32 today. So that trade not as enticing as it perhaps once was. Again, just a good little lesson to our listeners. People are always looking for those ratios, trying to squeeze every last penny out of it. If you have a directional bias going into an earnings and you want to express it, go ahead and express it. For that extra dime you're saving yourself there on that trade, you just cost yourself several dollars in return on that trade and actually cost you money in the end. So perhaps I just wanted to throw that one in there really quick before we get to the margin because we didn't have a chance to get to it last week. And Microsoft being one of the big movers of last week. What a surprise. Good old Softy actually doing something for a change. This last one here, Alex, is tailor-made for you, partly because I wouldn't be able to answer it for you as well as you could. He writes, question from Mr. Joe Rigg. He writes, I tried to write the BlackBerry weekly 9 put with Options Express, but the system kicked it out and said BlackBerry was now on increased margin. Why is that? How is this decided? Is it a decision by the broker or an industry-wide decision? How is the new margin level determined? Help me, Viceroy. You are my only hope. You gotta give the guy points just for the Star Wars reference alone.
Okay, it's a great question. And let me try not to do a long-winded answer, but the minimum margin requirements are set by the Fed. Firms can set requirements higher but not lower. So in BlackBerry, we look at the volatility, and we had moved BlackBerry to actually 60-50-40, 60% on the stock, 50% on the options, and 40% in portfolio margin. That metric is based on the volatility. And again, I'll remind everybody, margin is not intended, and I know this comes as a shock to some people, to protect the customer. Margin is intended to protect the firm from an unsecured debit. We had actually lowered BlackBerry to 60-50-35 on a portfolio margin, but the minimums are set by the Fed. The firms can be above the minimum. Is it generally uniform across firms? Yep, because we're all looking at the same playbook. Are some firms a day later than others to raise margin? That can happen. When that happens in the future, call the trading desk and have them look at your account and see if maybe there isn't something they can do based on your history to get you maybe a little better percentage on the margin, on the rate. But BlackBerry has been such a volatile animal lately that it's not likely, but that is a firm-specific issue. The Fed just sets the minimums. Firms can go above, but they can't go below.
Of course, BlackBerry closing today at $9, markedly off where it was trading just a few weeks ago. It got slashed, obviously, post-earnings, hence the bump up in margin. This thing has been moving quite a bit of late. Of course, it seems to have settled now around the 9 strike, but who knows where it goes from there, hence the higher margin. Thank you for that, Mr. Viceroy, and thank you to everyone who wrote in. We have so many other questions I would love to get to, but we're running short on time, so we'll save those for perhaps next week and keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching for our own trading screens here. And what we're watching this week is pretty much earnings across the board. Starting off, good old, some fruit company I never really heard of coming out tomorrow, the 23rd, actually. So maybe we'll start there. Uncle Mike, you said you have the put on and the underlying. That's pretty much about it. You're playing the wait-and-see game. Nothing else too scintillating going on in the old RCM camp, watching that. Any other earnings? You playing for it at all, or you're just playing wait-and-see this week?
Yeah, I mean, watching Facebook, possibly might be selling a put to get back into Facebook, possibly even before the earnings. I'll make a decision on that probably tomorrow. Probably the thing that's lighting up my tape, as you would put it, is gold and silver right now. We had a run up today, and I might actually be selling some calls against the collar position right now, because we've had the run up with which we've had since the low on the day of non-farm payrolls. Plus, we're kind of touching around the 50-day moving average as well. So combine that with the earnings week, and this is going to be an interesting 4 days.
So low BBIs anticipated for Uncle Mike at the very least.
You could say that, yes.
Can I trade some BBI futures yet? Is that liquid enough?
That's just a place I don't want to go.
Pun intended.
Yeah, I just don't want to go there.
Oh, join me. It's a dark, dark place, Uncle Mike. It's fun, though. Speaking of dark places, Mr. Sebastian, what's catching your eye for the rest of this week? Earnings Palooza. Take your pick, sir.
Yeah, I don't think Apple is going to matter. I don't think anybody cares about Apple. That's why the vol's so low. I think it's going to be a boring week. The VIX closed 1230. I think the most interesting story is, can it break back below into 11? My guess is it absolutely could. So that's what I'm looking at.
You're not
expecting, if you want to know the truth.
Not expecting any juice even from Facebook on the 24th or any of that. All
Facebook
a resounding
is kind of
mess.
interesting. I've been running a wheel trade, which I'm going to talk about on a webinar with Mike Tusaw here in a few days through thestreet.com, and I think that'll be that's an interesting play. But aside from that, there's really just not a lot that really interests me, other than just being, short the preem and living the dream.
Would that be analogous to the infamous Mike Cavanaugh Wheel of Fun?
It is very analogous to the Wheel of Fun.
Actually, jokingly, my father wrote me the other day, said, I love this Wheel of Fun. I'm going to start doing this. And so my dad's a big fan.
It's a good trade.
Of the Wheel of Fun.
I don't call it the Wheel of Fun. I do call it the Wheel, though.
Wheel of Fun has such a much better ring to it. All right, and last but certainly not least, Mr. Alex, what's catching your eye for the rest of this week? What earnings, if any, are really drawing your attention?
Amazon also this week, and Amazon is trading almost 8 vol points over Apple. So clearly there's a suspicion of some real variability in those earnings. You get an Apple surprise this week, you get an Amazon surprise this week. They're going to be the inflection points for the week. And as Mike pointed out, the metals, gold continues to be schizophrenic, just powered up through the 1300 level. It wasn't that many days ago we were talking about 1200. Don't know if that's schizophrenia or thin markets, but that's what we're looking at, and always keeping our eyes on the 10-year.
Always. We need a new show, Alex. It's called the 10-Year Watch. We can have you on that, just holding down the fort. What do you say? You think OX would spring for that?
We'll write it up and ask them.
There we go. I like it. But of course, we got to give you one final check-in here on the Widowmaker before we go. Netflix trading 241.5, exactly, almost down 20 handles. Looks like our friend here in the listener mail blog got it almost spot on, down almost. It's been never really broken through that south 20 handle level, that 240 strike. So it looks like he's doing all right. Jump on the boat with the 10-year note. There we go. Uncle Mike pitching the name for your show already there, Mr. Alex. Well, that unfortunately is all the time we have on today's show. Great to have Mr. Seabass back with us. So before we go, Mr. Seabass, we shall give you pride of place. What is kicking? What's coming up in the land of the pit? The birdies are telling me there may be a little webinar with some Wheel of Fun action coming up this week.
My good friends at RCM are hosting me for a webinar on, what was formerly called the Wheel of Fun, and is now called the Wheel Trade. And I'm going to really present, a couple of ways to do it, ways to look at it, and it should be a lot of fun.
A lot of fun indeed. Perhaps some might even say a wheel of fun. But who knows? Somebody just call it the wheel because they're boring, sad people. But other than that. All right, Mr. Mark, good to have you on the show again today. And Uncle Mike Tusaw, what's kicking in the land of RCM?
Well, like I said, we are kicking and screaming because we're just excited about having Seabass back on the program on TNT this Thursday night. And it's going to be a great webinar. We're really excited about it.
I'm still waiting for that cease and desist from Turner Network Television to come heading your way. Let me know. I got some good lawyers I can recommend when that time comes, sir.
I'm gonna need it.
All right. And last but certainly not least, Alex, I keep jumping in last. I got to rotate you first more. Mr. Alex, what is cooking in the land of OX?
Full schedule of webinars. I'll just showcase a couple of them. Not sure when you'll put the podcast up tomorrow, but tomorrow after the close, Idea Hub. Wednesday, we're showcasing a handful of new features on the platform. Special attention to the walk limit, which currently at this point from a technology standpoint is still an Options Express exclusive. An interesting webinar Monday. I wanted to showcase this. Our head of education, Joe Cusick, is doing a webinar on expiration, what to expect, and how to manage your position going into expiration. That's always a popular one, and Joe puts it up periodically, especially what the firm will do if you've got a position going into expiration and you're under-margined, what action you can take and what action the firm will take if you kind of duck taking action.
Good suggestion, Mr. Alex. Of course, Mr. Cusick, the man who will come on the show only when I'm on vacation, so I'm not sure what to make of that perceived slight. Or, and I guess I shouldn't have said all those jokes about his mother back in the day. He takes it very hard.
He's, as we used to say, big by big. He's size. So.
All right. Thank you for that, Mr. Alex. Of course, Joe, I am joking. You're welcome on anytime, particularly when I'm on vacation, because that's when you like to come on. All right, listeners, of course, you are encouraged to stay tuned for our forthcoming Futures Options radio program, title TBD. That's how new, that's how fresh it is. We still haven't even figured out what the title is, so we have some good ones bouncing around. So stay tuned for that, maybe later this week, if not next week. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.